Hey guys, this is Shane Harder from Seeking Unemployment. This is the real estate investment show where we learn how to become gainfully unemployed together. Now, today is part 2 of a much larger series where I go about asking a wide variety of investors from all different walks of life and different parts of the country, different asset classes, how they're handling very specific questions. So today's episode is all about the recession. This is what comes after the coronavirus lockdowns have been lifted and our worldwide economy has taken a pummeling from all being shut down. So what are they doing the same? What are they doing different? And so let's take a look.
Wholesaling to me is the ultimate strategy because it just does not affect me. I can make minor adjustments with the offers that I'm making, and I won't lose anything, and I can still hopefully satisfy my buyers that are out there. So I think for right now, for probably the next 6 months through the end of the year, I think that if a person wanted to wholesale, they're going to be A-okay. In some parts of the country, we're going to see just a little bit of a dip in property prices. So it might be a great time to buy, knowing that come the first of the year and on, that little bit of discount that you got is going to really pay off for you come the first of the year. But it really just depends on where you are. So I think if you want to play it safe, wholesale. That's the ultimate safety strategy. Cool. If you feel like, you know what, I'm just going to pick up some really good deals that I can be ready to fix and flip and everything, then pick them up over the next month or two as we start to see a few foreclosures. Pick them up and get them at that discount, do the rehab on them so that come first of the year, you're ready to go with it. Hopefully prices will start to tick back up by that point. We're already starting to see things improve with a lot of the jobs coming back, people going back to work. I don't know what the lingering effects are going to be. Might be totally devastating and we're just not seeing it yet. But ultimately, wholesaling is so safe that you're just not going to be able to go wrong.
So my goal is probably for the year following us escaping from lockdown is I'm going to probably do more live trainings than I've done in years. And I'm probably going to record them. And then after that, a lot of them are going to end up going online. And then I'm going to claw back to doing the same pace I was before. But yeah, now's the time to be prepared. You don't want to start. You don't want to be watching Netflix every day and then start looking into what you're going to do when this ends. Now is the time to start figuring out how what you're going to be, what value you're going to add when you get out of this lockdown, when you get back to normal, if you want to use the word normal, when things get more normal, now's the time to reinvent yourself for how you're going to show up in this world once that happens. And maybe go back to doing exactly what you're doing before. If you're happy and your job's still there, great, nothing wrong with that. But if now is a perfect time to reinvent yourself and come up with some new skill sets and just go kick butt once they open that floodgate.
We won't be doing anything different because we feel like the Class C apartment asset class is an exceptional recession buster. And we feel like we're going after that now before the recession even starts. And we're going to be secured in some nice properties going into the recession that should perform well because they are lower rent and they're, like I said, workforce level housing. And of course, a lot of workforce gets laid off during a recession. So there is that, but then there's also the fact that people are in Class A and Class B properties might need to downgrade to Class C. Yep. So that produces some demand as well in a recession.
Cool. A few of the things that we are doing, going into this, like I said, we had 11 or 12 projects going. One of the things that we are being aware of is what sort of project load we have and not letting ourselves get too far out in front of ourselves with that many. That's a lot of projects to finish up if something starts to turn, right? Yeah. So that's one of the things we're thinking about is, I think probably 5 or 6 projects, depending on where they're at, is a doable project load, and being able to switch gears,
I'm ready to pull the trigger. So I'm feeling good. I'm feeling confident about it. I have every intention to move forward. Doesn't mean I will. I don't have some expectation that I will hit specific numbers, but I have a general idea that if we talk again in a year, that you're going to see that I was extremely active.
A lot of people kind of feel like we're headed into a recession as things continue to be, lifted. You may not believe that that's happening, and if so, let me know. Or if you think that we are going into recession, how are you shifting your strategies to compensate for that?
Sure. For me, again, my business plan isn't changing, and I don't plan on slowing down what I'm doing. So I think what people should be concerned with, like for me, it's about like you make money in real estate on the buy. That doesn't change in a recession, right? What changes in a recession is you may not have as many people looking to buy a home that you would pre-recession, right? You may have more people looking to rent homes, right? So your quote unquote customer base may change, like their motivations, but again, people still have to have a place to live. And so my focus is and has always been finding good deals which provide multiple exit strategies, right? And so I will continue to do that. I will be I'm more cautious now with offers, right? When there was no pandemic and things were flying off the shelf, right? I could be a little more flexible in what that offer price is, because I'll probably make it up on the sale because the market's going up and up anyway, right? And I won't be that willy-nilly on offers. I'm more tight and sticking close to those numbers as possible now, because you don't know what that fluctuation in the ARV is going to be, given that we might be going into a recession, or that we're in a recession, or whatever you want to call it. So
yeah,
I just stick closer to my numbers, but I'm only trying to buy good deals. I've always only ever tried to buy good deals so that I have multiple exit strategies. It just might mean that during the recession, my exit strategy might be more rental than flip.
Very cool. Very cool. All right. So next one. This is about metrics in a deal. So when you're looking for a good deal, what metrics are you looking for? Do you have specific numbers?
I think that it's hard to not think there's going to be some kind of economic fallout with like 25 million people out of work.
Yeah.
What I don't know, and I don't think anybody knows, is exactly how that's going to manifest. With all of the people that have been losing their jobs up to now, it's been primarily in travel and hospitality. A lot of those people weren't necessarily buying houses, and so what we have felt within the housing community has been very little impact. That's not to say there hasn't been any. I mean, of course there has. There have been people that have lost their jobs while they're in the middle of a transaction. That happens. But I think that the real question is, are we going to have a housing crisis because of that? And that I don't see a big drop. Everybody thinks that the next recession is 2008 all over again, which is just not. Like the whole situation is vastly different. Yeah. But I think that the demand in Utah is so high, I could see us plateauing, because we have been on a tear for 5 years, right? And I could see us plateauing. I don't anticipate us having some major drop. And even in this market, I see that, people are sitting on the market if they're pricing it too high. It's not like, oh, I can put any price for my house on the market and someone's going to buy it for cash. That's not what's happening. Yeah. And so there's price reduction after price reduction that I see. And a lot of it is because they're putting it on too high, thinking anyone will buy anything. And the market is not supporting
just
that.
because
and
of
so
the inventory shortage.
Yeah. I mean, I think, yeah. And so I think like we still have enough demand for houses, even if we took, say, like 25% of the buyer demand out. There's still more buyers than there are sellers in this market. And so, I mean, I'm bullish on Utah overall. I don't have a crystal ball. So, I can't say like, oh, it'll never go down. I'm not saying that, but especially in like Salt Lake County, where like our inventory is tight because we're running out of space. Like there's not, we're running out of places to build houses and more people are moving into the county. And so just that factor to me says that we're going to weather it pretty well, but you know, it really is anyone's guess. I will say for myself, I'm stockpiling cash right now because I want to be able to take advantage of a market where more people have to sell houses than can buy them. Because like as an investor, you make money in any market. It doesn't matter. It's just your strategy that changes. And so that's kind of what I'm just keeping that there so that like if something does happen, I can take advantage of it. In the end, cash is what talks. So.
Yeah. All right, guys, that wraps up this video. If you'd like to connect with us and partner on some multifamily deals, click on the link below and we can send you all the info on how to get started there. If you'd like to check out the videos from the beginning of this playlist, click on this link right here. To check out the link that Google wants you to watch, click on this link right here. And lastly, if you want to make sure you see the future videos that we'll be posting in the same series, click on this subscribe link right here. You'll be all set to go. Thank you so much, guys, and we'll see you on the next one.